Thank you for watching our stock market video. Anyone interested in investing must have a solid understanding of the stock market, which plays an important role in our economy. The stock market is a marketplace for buying and selling stocks, or shares, of publicly traded businesses. You acquire a modest ownership stake in the company when you purchase a share of stock. Investors can buy and sell shares on the stock market, and the price of the shares varies according to supply and demand. We will examine the stock market's definition, operation, and numerous influencing elements in greater detail, the various investor and market participant categories, the risks and benefits of stock market investing, and much more will be covered. So come along with us as we investigate the stock market and discover how to make wise financial choices. The basics: a corporation that has issued shares that can be exchanged on the stock market is referred to as being publicly traded. This indicates that the business has transferred a portion of its ownership to the general public by way of the selling of stocks. By doing this, the business is able to raise money for business goals such as development and expansion. A protracted period of rising stock prices and investor elation is known as a bull market. Investors are eager to purchase stocks at greater prices during a bull market because they are optimistic about the economy's and business's growth potential. A bear market is a protracted period of declining stock values and pessimism among investors. Investors are more likely to sell equities at lower prices during a bear market because they are unsure of the economy's and company's long-term prospects. In a primary market, either through an IPO or a secondary offering, new securities are initially made available to the general public. Securities that have already been issued can be bought and sold by investors on a secondary market. The stock market steps in at this point. There are various stock classes, including ordinary stock, preferred stock, and bonds, each having their own traits and dangers. A number of variables, such as a company's financial performance, the state of the economy, and market mood, affect the price of a stock. It's important to remember that any type of investment requires a solid foundation in stock market fundamentals. Before choosing to invest, it's crucial to do extensive research on any stock or company. The role of investors: there are various types of investors in the stock market, each with their own objectives and tactics. These consist of individual investors, are those who use their own funds to purchase stocks, either for their own financial benefit or as part of a retirement or savings plan. Institutional investors are businesses like insurance firms, mutual funds, and pension funds that make investments on behalf of their customers or members. Professional traders are people or businesses who often buy and sell stocks, frequently utilizing sophisticated tactics and leveraging leverage to increase returns. An important investment strategy is diversification, which includes spreading out risk by distributing assets throughout many sectors, industries, and businesses. This lessens the chance that a portfolio would perform poorly as a result of the weak performance of a particular stock or market sector. Investors can choose from a variety of investment methods, including growth investing, value investing, and income investing. The main goal of growth investing is to purchase shares of businesses that are predicted to grow faster than the market as a whole. Buying stocks in inexpensive firms is the main goal of value investing. Buying stocks that consistently pay dividends is the main goal of income investing. When it comes to making investments in the stock market, investors have a variety of alternatives, from buying individual stocks to making investments in mutual funds and exchange-traded funds (ETFs). When selecting an investment plan, investors should take their objectives, risk tolerance, and time horizon into account. Investors should do their own research, consult a professional, and remain constantly informed of the hazards associated with stock market investments. The role of market participants. Each of the numerous market participants that make up the stock market has a specific function in facilitating the buying and selling of stocks. These consist of the marketplaces where equities traded are known as stock exchanges. The New York Stock Exchange (NYSE) and the Nasdaq are two examples of significant stock exchanges in the United States. Broker-dealers are businesses that function as a middleman between stock buyers and sellers. They generate money by collecting commissions from trades in addition to buying and selling stocks on behalf of their clients. Additionally, they offer their clients research and analysis, providing them with information on various stocks and market trends. Each of the numerous market participants that make up the stock market has a specific function in facilitating the buying and selling of stocks. These consist of market makers, or businesses or individuals who purchase and sell equities to keep the market liquid. They support the market's continual presence of buyers and sellers by purchasing and selling enormous volumes of inventory. The difference between the greatest price a buyer is ready to pay and the lowest price a seller is willing to accept is known as the bid-ask spread, which is another service they offer. Investment banks. By issuing fresh stocks on the primary market, they assist businesses with going public. They also offer guidance on mergers and acquisitions as well as help businesses issue debt securities. Regulatory organizations are in charge of making sure the stock market runs smoothly and openly. The Securities and Exchange Commission (SEC) in the United States and the Financial Conduct Authority (FCA) in the United Kingdom are two examples of regulatory agencies. Rating agencies. They offer credit ratings on various equities and bonds that assist investors in assessing the risk attached to various products. Hedge funds and other financial institutions. By enhancing market efficiency and supplying liquidity, they are crucial to the stock market. To create returns, they also make use of sophisticated methods and leverage. It's critical to remember that various market players interact with and affect one another, and that their actions and decisions have an impact on the stock market's overall performance and stability. Risks and rewards. Since the value of stocks can change depending on a number of circumstances, investing in the stock market involves some risk. These include the state of the economy, business operations, and sentiment in the market. The possibility for capital growth and the availability of dividend income from certain equities are two benefits of stock market investing. It's crucial to keep in mind that past success does not ensure future success, and there is always a chance of losing money. By distributing assets over a variety of equities and industries, diversification can reduce risk, but it's vital to keep in mind that it does not guarantee a return or provide protection from loss. When investing in the stock market, it's crucial to take one's risk tolerance and time horizon into account. An elder investor with a shorter time horizon might be more concerned with capital preservation, whereas a youthful investor with a longer time horizon might be more ready to take on risk in the search of higher returns. Making wise investment selections requires having a thorough understanding of the advantages and dangers associated with stock market trading. To reduce risk and increase return, it might also be helpful to consult an expert and do extensive study. In conclusion, the stock market is a crucial component of the world financial system because it gives people and institutions a place to put their money while also giving businesses a way to generate capital. To comprehend how the market operates, it is essential to comprehend the numerous market participants, including stock exchanges, broker-dealers, and market makers. Since the value of stocks can change depending on a number of circumstances, investing in the stock market involves some risk. However, the prospective benefits of stock market investing also include the chance for capital growth and the capacity for dividend income. When investing in the stock market, it's crucial to take one's risk tolerance and time horizon into account. One should also conduct extensive research and seek professional advice when making investment decisions. In general, the stock market has a wealth of options for investors, but it's critical to understand the risks and make wise financial decisions. Thank you for your interest. Tell me in the comments, what do you think?